Hey everyone, welcome back to Corporate Decoder. Today we're diving into LinkBancorp's latest quarterly report. Get ready for some number crunching because this report is like a tangled web of financials. But we're here to untangle it for you. Before we get started, if you enjoy getting straight insights from corporate documents, subscribe and join our Discord community linked in the description below for more discussions. LinkBancorp, a smaller bank holding company focused on community banking, just dropped their financial report for the first 3 months of 2025. The headline, a big jump in profit, largely thanks to selling off some branches. But let's see if the underlying health of the bank matches that shiny profit number. This document is their quarterly report, known as a 10Q. It's a report that all public companies are required to do, and it gives us a snapshot of what the company has been up to in the last 3 months. The date we need to pay attention to is March 31, 2025, as that is the end of the period. First up, let's peek at the balance sheet, which is a snapshot of what the company owns and owes. As of March 31, 2025, LinkBancorp reported total assets of $286 billion. That's a slight dip from the $2.88 billion of December 2024. So they have slightly less assets than last quarter. Their total shareholders' equity, the value belonging to the owners, sits at $294 million. Meaning their assets decreased slightly, but so did their liabilities. Hence, shareholders' equity actually increased. It was $280 million at the end of the prior year. Now let's turn to the statement of operations. This tells us if the company made a profit or a loss. They reported a net income that's a profit of $15.23 million for the first 3 months of 2025. Not bad at all, a far cry from the $57 million they made during the same period last year. That translates to earnings per share of 0.41 cents, a big increase from the 0.15 down per share last year. Looking closer at their revenue, the biggest contributor is, as usual for a bank, interest from loans totaling $37 million. Then the interest from their investment securities of roughly $2 million, and nothing too crazy there. On the expenses side, deposits cost them $12.3 million in interest payments, while other borrowings and subordinated debt added another $2 million, so they had a cost of around $14.33 million. Moving beyond interest, let's check out non-interest income, which includes things like service charges. Here's where things get interesting. They reported a gain on the sale of branches of $11 million. Now, they don't get this every quarter. That sale of New Jersey branches is a one-time event, as they sold their New Jersey operations. When it comes to expenses, salaries and employee benefits are their biggest cost at $11.2 million. It's followed by occupancy and equipment costs. Also worth noting is their provision for credit losses. Basically money they're setting aside for potential bad loans. For the past 3 months it was at $2, and it's also important to note that the weighted average number of shares outstanding also increased from 36.9 to 37.1. This affects earnings per share since there are more shareholders now. Now let's have a look at their comprehensive income, which includes other things that don't go through the main profit calculation. In this case, it's mostly unrealized gains or losses on their investments. Also, a pretty standard thing to see on a bank statement. The biggest factor at play is unrealized gains on available for sale securities, but that's mostly just market fluctuations. Looking at the consolidated statements of shareholders' equity, there also aren't any unusual changes. There were some employee stock purchases, which is nice, and they're paying some dividends. So overall, nothing too special happened. Alright, let's talk about some of the itty-bitty details in this report. These smaller banks are facing a few changes in accounting rules, but none that seem to be affecting them immediately. This section goes into how they value some of their assets. They use standard methods based on market data and independent appraisals, which is to be expected. Moving on to the section on loans, the bank mostly deals with real estate, commercial and construction loans, and there are loans to farms, so it's a mixed bag of clients. Okay, that was quite boring, let's move on. Alright, almost there, let's see some legal drama. Nope, it's quiet on the legal front. They have no major lawsuits to disclose. And that's a wrap for the formal filing. Now time to break down what it means for you. So what's the story here? LinkBancorp had a pretty solid quarter, boosted by a one-time gain from selling off some branches. Looking past that boost, the core business seems stable with decent loan growth and increasing profits. However, that sale tells us that they're optimizing their operations, likely focusing on the most profitable areas while minimizing risks. That dip in assets, while not alarming, indicates that they're in a transition and shrinking operations. It's all about being more efficient and maximizing profits. One notable opportunity comes from them having a well-capitalized bank. This is attractive and means they have the resources to grow. They have some interesting subordinated debt which helps boost their capital ratios but is also riskier. As for market conditions, they definitely have seen some unrealized losses in their securities. That isn't necessarily bad, but it needs to be monitored. Overall, LinkBancorp is in a decent position. While some financial highlights are not as big as they seem when you exclude the branch sale, they are in a strong position to take advantage of future opportunities. A potential investor might consider their debt level and evaluate the New Jersey sales to determine the best course of action. Alright, that's our breakdown of LinkBancorp's latest filing. Let me know your thoughts on these numbers and what they signal for the company's future. If this analysis was valuable, hit that like button and subscribe for more deep dives. Check out the Discord community for more discussions. Thanks for watching. See you next time.